More has happened in the last 6 months than in the previous 5 years. Stablecoins are a very revolutionary, I would say, innovation of this industry and the biggest product market fit. ChatGPT moment of crypto.
With the Genius Act, this is going to go to a $2 trillion industry in the next 1.5 years.
You're not only going to think in, am I going to be paid, I want to be paid in US dollar or Hong Kong dollar. I'm going to be thinking, I want to be paid in MicroStrategy stock, or I want to be paid in Bali real estate.
Hey everybody, happy to be back. Not only happy, we're super excited. Today we've got Jakob Kronbichler joining us, founder of Clearpool and CEO of Clearpool, longtime crypto participant, but a lot of entrepreneurial experience on your side. So really glad to do this. I'm the host, Stefan Rust, founder of Truflation and the TRUF.NETWORk. Where we bring you the source of truth. And here we go. Jakob is going to be the source of truth for all the work he's doing around payments in this time of super excitement, where there's so much going on, so much innovation, so much change, and ultimately loads of opportunity. How are we getting and diving in to see the opportunities that are being created and being monetized by Clearpool? So Jakob, great to have you. Thanks for joining.
Thank you, Stefan. And I'm super excited to be here.
Yeah, I think one of the things is maybe just a bit of background on yourself, how you got into crypto, just quickly give people a bit of an overview of who you are and how you got into where you're at now.
Great, sounds good. Yeah, I think I have a slightly more unconventional background for a crypto DeFi founder, meaning I'm one of the few guys that does not come from TradFi. So my background is actually startups and consumer-facing startups. So after university, I joined a company called Rocket Internet, and Rocket Internet was in Europe, pretty famous startup incubator, and their business model was they looked at what worked well in the United States, companies like Amazon, eBay, Uber, and then they would copy those business models and launch them wherever there wasn't a established player, mainly emerging markets, but basically all over Asia, also Europe, Africa, all over the place. So I was one of the guys for them that would go to different countries and launch consumer marketplaces. So my first venture was eBay that I've been launching in Eastern Europe and Caucasus area. So I built and managed an e-commerce team for in Albania, in Azerbaijan, in Georgia. So that was a lot of fun, right? Because we were quite early, and we basically came in and we built up a team within a few months. And then really actually saw pretty quick, actually good results. That company later then also went public, and I internally moved to another company within the same umbrella, a company called Foodpanda. Foodpanda is one of the largest food delivery companies in Asia, actually in the world, and I was one of the early guys again for Asia. Basically, that's what brought me to Hong Kong about 10 years ago. I then left Foodpanda and I moved into fintech. I was the head of growth of one of the largest fintechs in Southeast Asia. It's a company called Aspire. Aspire started off being a alternative lending company, and then moved into becoming a digital bank for businesses. So also there, we basically built up a digital neobank from scratch. So, I kind of know all about, banking inefficiencies and what it takes to really build up a bank and have all the different rails, the cards, the FX, etc. And that, for multiple countries. Around that time, I think it was, summer 2020, the famous DeFi summer. I had a few friends in Hong Kong that were more involved in crypto and DeFi. And that's when I basically got the crypto bug myself, having, structured all sort of like lending opportunities in emerging markets like Indonesia, Vietnam, etc., etc. I was initially very excited about the lending protocols, Maker, Compound, Aave. Those were really, exciting, interesting. So that whole sort of like idea of a trustless lending market, really got me. I started playing around with it, and very soon I realized that I spent most of my time actually, in crypto. So anytime I didn't work, I was working. I was actually exploring DeFi protocols, etc., etc. And by that time, I realized, okay, I think this is an industry I want to get involved. And I met my co-founder, Alessio, who is also and also Rob. Alessio is the founder of a crypto custodian here in Hong Kong, and we had this idea of introducing the concept of credit into DeFi. So basically, instead of just having over collateralized loans like Aave and Compound, we thought, hey, there's a lot of companies out there that actually have a good credit profile. If we combine sort of traditional risk assessment methodologies, and combine that with DeFi, where we create pools that can be funded from anywhere, and we create composability around those tokens. We can really create a decentralized credit marketplace, where different types of companies can actually raise liquidity from the DeFi ecosystem. And that was the birth of Clearpool. This is now 4 years ago. It is still a very exciting journey. We've become one of the largest players in the private credit space. Overall, we've done nearly $900 million worth of loans, and we work with all types of companies, counterparties. We've done loans to trading firms. We've done loans to fintechs. And lately, we are very much, going all into the payment space.
So you leveraging crypto to lend to fiat participants, or you're doing both ways, lending fiat, taking fiat money and lending to crypto entities?
So it's a marketplace, and the marketplace runs on stable coins.
Yeah.
So basically the whole operations on our side all run on stable coins.
Yeah.
The actual borrowers can, traditionally we focused a lot on still crypto native firms. We worked with a lot of trading firms. We had, the large crypto native ones like Wintermute, all the way to, some of the largest TradFi guys like Jane Street as borrowers. But we also did have some fintechs as borrowers that were, then actually converting the stablecoin into fiat, and financing sort of like non-crypto real world transactions, I'd say.
Yeah. Interesting. Yeah, no, because there's definitely a lending need in the crypto space, right? A lot of protocols are looking to borrow to help grow their TVL or grow their business, and provide yield. And then there are ultimately a lot of lenders that are also looking for greater yield opportunities, right? And yeah, and we're seeing just the growth in fiat lenders now looking for yield in sort of, let's say, TradFi world, maybe is a better way to say than fiat, just coming and trying to find yield opportunities in the realms of crypto, and where with their stable coins, right? Where do they get that? And maybe Clearpool seems to be a good spot to go for that marketplace to identify and opportunities and obtain yield.
Yeah, no, absolutely.
Yeah.
I think maybe there, one of the learnings we got is that, if you're doing loans in stable coins, I think the real unlock, and it really makes sense if the companies that are taking on the loans are also stablecoin native companies. What I mean with that is, if you are giving a loan to a company that operates completely in fiat, then yes, there might be, theoretically, if you can find crypto native lenders that can only fund in stable coins, you still have a bit of a value unlock. But there are quite a lot of inefficiencies. They need to off ramp that money, etc. And the whole point of doing this in stable coins isn't really there anymore. So what we realized is that actually the borrower profiles that are better are the ones that are already stablecoin enabled. They're already utilizing stablecoins as part of their business model, and this can obviously be trading firms, prime brokers, but this can also be this new sort of like, I would call them Web 2.5 fintechs, mainly in the payment space, that are utilizing stable coins for things like facilitating, cross-border transactions or instant liquidity for card transactions, and a lot of other exciting use cases where stable coins are really a game changer.
Yeah, so it's super interesting. I think with your background and where you've come from from the internet world, right? And we're now talking about internet capital markets. As more and more of TradFi moves on chain and leverages the internet as its new rails, and I don't need to have all these proprietary rails that have been built up using COBOL mainframe infrastructure, COBOL programming language, IBM mainframe infrastructure, sort of services that are plus X days to get settled, etc. Don't work 24/7. In a crypto world, it's 24/7, and you have all of that instantaneously.
Yeah. So I have to admit that, even though now today everyone obviously is talking about stable coins, right? I think I was recently at a birthday party of one of my TradFi friends, and nobody was in crypto, and everyone there was talking about stable coins as well, right? After the Circle IPO, there's obviously like a lot of excitement, and right now it seems that it is very obvious that stable coins are very revolutionary, I would say, innovation of this industry, and the biggest product market fit, the ChatGPT moment of crypto, as Tom Lee likes to say. But stable coins have been around for a long time. And, I actually only really joined crypto, as mentioned, in 2020. Stable coins were already around. We've already been doing a lot of things in stable coins. Myself and a lot of my friends, we've already been sort of like, I wouldn't say living, but we already sent each other stablecoin payments, etc., for a very long time. But I think still I was not aware of how transforming stablecoins really were, until I would say relatively recently, when I realized the sheer sort of like impact that stablecoins actually have on a lot of people, right? So I was recently talking to so I actually I did an exchange semester in Brazil doing my undergrad studies. And obviously Brazil is a great place, but one of the, like, I would say, not as good things of Brazil is it has a weak currency, right? The currency depreciated
Yeah.
quite significantly against the US dollar over the past years. And when I talked to my friend from back in the days in Brazil, I realized that basically, while here maybe I live in Hong Kong, crypto is still something for people who are slightly more crypto passionate. In Brazil and other emerging countries like Argentina, all over Africa, it's really part of everyday life. So himself, all of his friends, they're not crypto native, they don't work in the industry, but they're all utilizing already sort of like fintechs that run on crypto rails. They're already saving, utilizing stable coins. They deposit their money into stable coin yield products like T-bills. They're accessing other yield products already. They're like, all the businesses have incorporated, or a lot of the business have incorporated stable coins into their sort of like payment processes. So, companies that are sending money all over the world. So you kind of realize that crypto is really becoming mainstream, which is something, again, that I'm very excited about, because for the longest period of time, it felt a little bit like we built all these amazing innovations, but at the end of the day, there wasn't anyone really to use them except for, the insiders, the usual sort of like crypto native yield funds that were sort of like looping those tokens on the usual protocols. So that's been a big eye opener for me. And I think that's the thing that makes me currently the most excited And I'm based here in Hong Kong. Hong Kong has just passed the stablecoin bill as well. Hong Kong has just, or they just announced, or CMA announced that there's going to be the CNH, so Chinese currency stablecoin, coming as well. And also there, right? I the other day I talked to the CEO of one of the largest, payment companies, cross-border payment companies, and basically they're saying that, and this is a massive unlock, and they expect that all of their transactions are going to move on to stablecoin rails. So I think we're really right now at the point where adoption is accelerating very, very quickly. And being in the RWA space for a few years, I feel more has happened in the last 6 months than in the previous 5 years that I was involved. And I think you were involved even longer. So curious to hear what you think. But overall, very excited about those developments.
Yeah, no, I mean, I think so. I mean, I couldn't agree more. I think it's really, we're such at an early stage of where stablecoins are really going to go, right? It started off really about 2013, 2014 with Tether, right? Actually acting as the settlement layer between the different crypto exchanges. Why? Because you couldn't off-ramp and on-ramp to do settlement between the exchanges, and especially if you wanted to move currencies back and forth. And so Tether became the currency to move back and forth. Then in DeFi, Circle came about with their USDC together with Coinbase, or Base, Coinbase at the time. And that was really interesting. And I was really heavily focused at Bitcoin.com. We were driving payments, right? We were looking at Bitcoin as the peer-to-peer electronic cash where you could do payments and settlements. And at the time, there was no alternative, right? I mean, Tether was really just between the exchanges. It was only crypto people. And so Bitcoin was ultimately the currency. And before Bitcoin, the blockchain became clogged with all of these transactions, it was an open, freely traded exchange where you could settle really quickly and you could settle at basically no cost. And so it's a really attractive proposition if you're a merchant. You have to pay 5 to 7% in fees to the credit card companies, to the POS vendor, point of sale vendor that was selling you this equipment that was actually allowing you to do the transaction and connecting to the banking infrastructure. So you had some 10 to 12 participants, a gateway, sort of toll takers across a settlement of a transaction. Wow, how inefficient was that, as you were talking about? And Bitcoin was good because you had instant settlement. It was transparent. You got the money right away. You didn't need to wait 30 days, and you didn't have those 12 toll takers along the way. But one thing that did change was all of a sudden Bitcoin had shifted to being too slow, being too expensive. The transactions were up to $100 at one point. And ultimately, it became and shifted from being oil to, or payments or money, to becoming an asset, right? So all of a sudden it became gold, the digital gold. And so stablecoins were essential. And I think that's where ultimately now with this new regulatory framework where all of a sudden stablecoins are becoming, something that people can recognize, they acknowledge, it becomes a really interesting proposition for any merchant. It's really going to change the game in terms of, I don't need a credit card anymore. I just need to be able to read a QR code. And I think in Asia, you have a huge advantage where everybody is extremely familiar with QR codes and paying via QR codes. They do that all through their instant messenger apps already, WeChat, whatever it is. And so, yeah, I mean, it's interesting with your background in payments, in fintech. Where do you see this whole payments market going, right? Especially if stablecoins goes from I think I wrote a piece back in January where with the Genius Act, this is going to go to a $2 trillion industry in the next 1.5 years. So this is a 10x growth from where we are now, and payments has to drive it, right?
No, absolutely. I think generally, right, it is definitely ironic that an industry that set out to sort of like completely reinvent money as a concept, ended up having the biggest product market ended up being the dollar on chain, right? But regardless of that, yes, I 100% agree. Stable coins are actually really transformative. And I talk out of experience, as mentioned, right? Because the thing with like if you look at neobanks, right? Like what do neobanks do? Neobanks actually they still utilize traditional rails, right? They still utilize traditional rails, like concept called open banking and other sort of like banking as a service companies. Um, and then they mainly bring you a better user experience, right? A better,
Yeah.
user interface, better user experience. They cut down the fees, but they only cut down the fees because they're taking less profits,
Yeah.
right, than the banks. But ultimately, they're still running on the same exact rails. And yes, it is an absolute nightmare, right? Like once you've been in payments, you realize this is very complicated. There's so many intermediaries, there's so many intermediaries involved in one credit card transaction, and it is actually very expensive, right? Still, on average, credit card transaction is like 2.5%. Some of the credit cards, you're talking about American Express. I mean, most small merchants don't take it, and I understand it, right? Because they're charging you an arm and a leg for every single transaction. And when it comes to cross-border payments, it is even worse, right? When it comes to like remittances,
MoneyGram
it
and
is
all of
it
those
is
guys.
it
Yeah.
is everyone always talks about the time that it takes, and obviously time is money, right? So time is money, but it's also the cost, right? Especially for foreign workers, etc. The cost it takes to send money home, back in the via Western Union, etc. It's really it's really an old stack that has sort of like grown into a little bit of a Frankenstein, I guess, with all the different countries, and all the different sort of like networks, and stable coins. The concept of sort of like instant settlement without any intermediaries, even though it seems like a very simple concept, it is extremely powerful. And yes, so the payments is kind of like the first big use case, right, that everyone understands. The payment industry is now the first industry that is being disrupted by stable coins,
Yep.
and it's first happening obviously in emerging markets where there is a real need, because in emerging markets the infrastructure is even worse. So the pain of sending money from a African country to Hong Kong is much bigger than from the United States to Hong Kong, because there it actually happens relatively quick. But that's just the first sort of like, this is the first this is the entry point,
Entry point.
payments. But then once people actually are having stable coins, then you will have a lot of other interesting use cases, such
You
as
know,
RWAs, yield bearing stable coins, or yield bearing assets. Basically, the same concept applies, right? Like today, if I want to buy stocks, I need to go there. If I want to buy real estate, I need to talk to lawyers, etc. It takes several days. I need to pay quite a lot of money for every signature, etc., etc. So the concept of having one universal ledger where everything is being tracked on is extremely powerful. And now that payments are moving on chain, we will see other assets also moving on chain. And I think the exciting, or the big novelty now, is that who are gonna be the future banks in that sense, that are gonna offer basically, that are gonna offer your saving accounts, that are going to offer your financial products. I think also there, we will see a little bit of a shift, that it is now going to be fintechs or maybe tech companies. I think it's all about whoever has the most distribution can now sort of like potentially even bypass traditional sort of like financial institutions, can offer these products to their users. So we will, some traditional, more financial institutions are gonna adapt, I'm sure. But there's definitely gonna be a big disruption coming from the tech players. And I think that the fact that's gonna happen is that mainstream adoption of crypto, I think probably now is coming from big tech, or tech players or startups, that again are going to offer better user experiences, better interfaces, and going to bring the regular person onto the blockchain. And very soon we're not even going to talk about blockchain anymore, because it's just superior rails. Everything is going to be on the blockchain, and people utilizing the blockchain, they're not going to be aware of the blockchain. Just like, honestly, nobody really is aware of how a card transaction actually works, except for people who are in the payment
In the
industry.
industry. Yeah,
Yeah.
exactly. But I think also, it's like, I think it's what a lot of people don't realize is the blockchain is just basically a database. It's a ledger, right? I mean, it's just keeping an account of everything, and it runs on the internet, right? I mean, if it weren't for the internet, the blockchain wouldn't be where it is and have that rapid adoption, which I think, to your point, just highlights the fact that it's an abstraction, right? We're just abstracting from that. So we don't really need to care about that. And I think the retail users won't care about that. But I think one of the things is always that comes up if you look at the growth is liquidity, right? So especially cross market, or cross territory transactions, right? Or cross border transactions. If you look at that, one of the things is, how do you solve the liquidity, and how does Clearpool come in, and where do you see that evolving as, trying to settle between different countries, different currencies, right? Imagine today I have an Amazon dollar meets Apple dollar meets Alipay dollar meets a Hong Kong, tokenized dollar or something, right? And so how all of those are going to be swappable, right? And so I need liquidity around that. How do you see that happen and settle?
Yeah, so the concept that everything is going to be on stable coins, and you don't even need to on and off ramp anymore. I personally actually believe this is coming, but it's not going to come tomorrow, right? It's going to take at least a few years. Who knows, right? Sometimes you have these times where there's a lot of change, and then you expect everything is going to be completely different next year. But then the reality is, in a lot of those things, usually take a little bit longer than you actually foresee them to take.
Gradually, then suddenly, is what we call
Yeah,
it.
gradually inside. But then, so obviously, what we are now focusing on is, we are focusing on the payment flows, where we basically can bridge sort of like traditional payments, where we can enable instant liquidity for traditional payments. So everything that still has a fiat lag, where you have bank settlement times of a few days and inefficiencies and costs. We are, as Clearpool, basically providing liquidity to fintechs that are sort of like financing these inefficiencies via stablecoins, right? So one of the examples is, as already mentioned, a cross-border payment transaction, where you need to send money from an African, from Nigeria to Hong Kong, to China, etc. Right? While it takes a few days using Swift, you'd now sort of like utilize stable coins, and you would finance basically this transaction via a stablecoin transaction. And then you would basically send that money immediately to a local payment service provider that can off ramp that money, and as the merchant basically just receives the money immediately. Time is money there, obviously, as well, and at a lower cost. And these type of flows, the same could be done for a credit card transaction. If you're, for example, on ramping money onto an exchange, you pay with a credit card. There is a company there that basically provides the liquidity immediately, and that liquidity, that working capital is provided in stable coins. So what we are right now doing with Clearpool, we are very heavily sort of like focusing on this concept, which we call PayFi, payment financing, where we're basically financing this sort of like payment flows that are usually still relying on the traditional legacy banking stack. And we're helping fintechs to finance this payment flow with stable coins. For lenders on our platform, because this is a credit product, this actually represents also a very interesting opportunity, because in the past we've done all types of like receivable financing opportunities. For example, like invoice financing, where you're basically financing, the 90 days or sometimes like 30 days, 90 days invoices. So you basically, it's called receivable financing, right? It's a private credit product where you're financing this sort of like invoice flows. Now, one of the issues with this type of products we realized was that it wasn't very appealing to the sort of like crypto native crowd, because the crypto native crowd is usually used to very quick sort of like liquidity, right? You go on Aave, you can provide liquidity and you can take it out immediately. You don't need to wait, right? Now, suddenly you're doing this sort of like traditional private credit financing products that are, yielding, that have interesting yields like mid-teens, for example. But, you need to lock up your liquidity for 1 year. And we realized that was not really, it wasn't really an attractive product. So the interesting thing with payment financing is, at the end of the day, it's very short-term receivables, right? You're still sort of like still the same concept, but actually what you're financing only a few days, right? And you're financing only a few days, which are the days that it takes for the bank to settle. And that leads to a product that can be ultimately a lot more liquid for lenders. So while the traditional product for receivable financing private credit, you need to wait for 1 year or 6 months. Here you can have your money back within a couple of weeks, maybe. The other interesting part is that because of this very short-term financing cycles, these fintechs, they're basically, if they're financing on average 3 days, right? If you extrapolate that over 1 year, they basically can finance this flow like over 100 times, right? Now, if they can earn 0.5% or sometimes even more on each of those cycles, and that obviously leads to a very, very high a return. So it's not uncommon for these fintechs to have returns in the 20, 30, 40% plus range, right? So for a user, basically you are actually financing this payment flows. So you're financing real world payment flows that are non-crypto related. So even if tomorrow the bull market is over, hopefully not, and everything, all the crypto native yield goes to zero, these opportunities, they're still going to yield, like 15% or potentially even more. And at the same time, they look and feel a little bit more like DeFi. So you have shorter sort of like liquidity windows. And overall, that's how we think that, RWA should really be, right? You should really create a product that is, superior than the sort of like traditional private credit products that we have in the market.
Yeah, and I think we've seen in the past that money flows where there's yield and where there's opportunity, right? And will result where there's yield, there will evolve sort of risk reward ratios that people will calculate and interpret, right? And sometimes there's a bit of exuberance, right? So I go a bit further on the risk ratio scale, and then sometimes I'm a bit more cautious, and so I will have a lower risk profile than others would. But I think that's sort of, we're going to see a huge influx in opportunity, and I think with RWAs, the tokenization of assets, stablecoins coming in, which is the tokenization of a dollar asset, or debt obligation. We're seeing a rapid evolution in an adoption, ultimately, thanks to that with crypto. One of the things that we've been talking, we do a lot of, with TRUF.NETWORK, we capture a lot of pricing data, right? And so we have 100 million items that we track, and we go all the way down to, cinnamon spice and things like that, where we can actually track the evolution of the raw commodities, which then ultimately price changes there has a ripple-on effect in the actual end product that you find on the shelves in the supermarkets as well. And one of the things that we do when we talk to the traders and the merchants and the farmers for pricing data is letter of credit. a huge business. The world depends on it. It's global trade, yet it is such an archaic system that really is, in a way, it's payments, right? So you got to pay a farmer, but you're paying him, sort of more retail price. You've got a wholesaler in the middle that does the shipment, and then you have a buyer on the other end of the planet, cross-border. How do you do all of that settlement in the past? And banks are no longer supporting that because maybe it's too costly, the margins aren't good enough. But isn't that an area where crypto could really step in? And to all your points, I'm setting payments, cross-border settlements, all of that is something that, is right up Clearpool's, sort of alley, no?
Yeah, no, 100%. As mentioned, I think the interesting the unlock, with stable coins really powering global payments. I think there the unlock really came that you suddenly have a like a use case where stable coins are really needed, right? So it's
Yeah,
it's not about
yeah,
just getting the money. Like previously,
yeah.
sometimes someone just company just wanted to have cash, and then they were saying, okay, if we can get it on stable coins, we take it as well. But here is really like the actual stable coins are part of that sort of like business model, right? They're part of that payment flow, and they're part of the um, of why of that sort of like creating instant liquidity and improving this flow. And I think the what you just described is also one of the areas that 100% is gonna be disrupted by stable coins and needs to be disrupted. And the other beautiful thing is this really is actually helping the poorest of countries the most, right? This is really like actual an innovation, where there is less of the sort of like hype associated with a lot of, I would say, other crypto products in the past, and we're really talking about sort of improving unit economics for merchants, and the merchants that are affected the most are those merchants that live in countries
Exactly,
where there is
exactly,
poor infrastructure. In
exactly.
emerging markets, in developed markets, as mentioned before, it's actually not that bad. But in this type of market, it's a huge unlock. The other huge unlock is actually just holding the US dollar, right?
Yeah.
Something that we can't really think about it. I'm here in Hong Kong. The Hong Kong dollar is pegged to the US dollar. Before I was, in Europe, the euro is not back, but it's still, stable. But in countries where your currency, there's countries where your currency is like, is worth a lot less every single year. Not even every single year. Sometimes a matter of days. And there, basically just having access to US dollar is a huge unlock
Huge,
for
huge.
for
Yes.
this for these markets, right? And really like empowers individuals and companies and really changes their lives basically, right? So yes, and what we see again is that you know it's gonna come. We believe it's gonna come, but obviously you always need to go with the initially you want to go with the least resistance. So where is it gonna be adapted first? Who is gonna adapt it first? We see that the players that are now emerging are obviously like the fintechs, and a lot of those sort of like new players are like this Web 2.5 fintech players that are really stablecoin first. But at the same time, we see obviously like a lot of the largest fintechs in the world, like Stripe, PayPal, are actively acquiring already sort of like stablecoin businesses, and are sort of like incorporating stablecoin transactions into their operations as well. So it's really like an industry that is heating up a lot. Yeah.
Yeah. No, I mean anything that's growing 10x in the next 18 months is definitely going to heat up, right? And I think everybody's seeing that opportunity. I think from an investor standpoint, we try to sort of look at where is the opportunity in this stablecoin market, right? I can't buy stablecoins because stablecoins are stable; they're pegged to a dollar, right? And so they're not likely to go up or moon, as people in the crypto would like to call it, but or any investor, right? And so where are they? Are the opportunities are really in my view is bridging. right? So I need to have, if you're sending me a stablecoin on Arbitrum network and I got to settle on Base over there or on Solana over there, or merchant has got SolPay, how do they settle? Where's all of that transaction happen? That's going to be one area, right? So CCIP from Chainlink, CCTP from
Yeah.
Circle, then you've got, Axelar, et cetera,
Yeah.
Layer Zero, all of these providers that are going to help with that.
Yeah, and I think there's a lot of there's a lot of actually good progress on that sector, and I think also one of the things that I like to see is that we really it
Which
feels
also,
that we're
to your
maturing.
point, we have to find an abstraction layer, right? Nobody cares about the blockchain.
Exactly.
So
Nobody
all of
cares
that
about the
has to
blockchain,
happen
and
in
that's
the
also
background.
refreshing to see. Even those fintechs that we now work with,
Yeah.
they are not really as sort of like crypto native. They don't really care, what kind of like chain, where it's coming from, and it's actually refreshing. They just see this as a cash that comes on a better sort of like on a better rail, right? And that's all it is. However, obviously, still very powerful in terms of like where you can invest. Yeah, obviously, any company that I would say adapts well to this new change is probably going to be a company that is leading this new reality. While if there are companies that are not adapting to this new change, even if they're like large traditional financial institutions, I would say they might become obsolete over the longer term. I personally believe it's moving much more and more into a space where distribution is everything, right?
Yeah.
Because a lot of this, a lot of the blockchain complexities are getting, they're becoming less and less, right? Like we see a lot of this, like even
Yeah, but
chains are
also,
quite
I think we,
commoditized, right? Yeah,
yeah,
it's
and
quite
as you mentioned, right,
commoditized.
you've got,
Yeah.
not only are they commoditized, the fintechs are much more attuned to working with different protocols. They're building out new APIs. They're much more agile to understanding the technology requires additional integrations, right? Yet maintaining the same level of 24/7 security levels, right? And so, yeah, to your point, I think that's such a, and they have the distribution as a result because they build a better user interface.
Yeah, so I would think that we would see companies like Meta, companies like
Yeah,
Amazon, and you
WeChat,
just basically the same the
Tencent.
same players that are already right now capturing the biggest audience. A lot of those players are also going to become very strong in this field. However, I do also want to believe that there's going to be some newcomers, right? Some startups that are
Yeah.
basically right now maybe still relatively small, but they're gonna eat a lot into the market share of some of the larger players. And I think with the larger players is whoever doesn't adapt is gonna be left behind, just like it was with the internet and probably a lot of the other sort of like big breakthrough innovation, or just like it happens with AI, right? It's like it's a similar it's a similar situation there. Yeah.
So I mean, ultimately, you're sort of a marketplace, right? So you're in the middle and sort of a sort of, I'd call it B2B service for lack of a better name. But in the end, you've got, on the one side, you've got a heavily mobile, sort of savvy user base, right? Where you've got these new fintechs that are emerging and going heavily into crypto, from a Robinhood to a Revolut. All of a sudden, these brand names in the fintech have moved heavily into crypto. You've got the existing players, Instagram, WhatsApp, Telegram, et cetera, X. All of a sudden, they have a huge distribution to what you were talking about earlier. All of them are going to be buying, thanks to the Genius Act, are going to be buying treasuries, and we'll be minting their own dollars. And all of those need to be swappable, need to have settlement cross-border, they need financing, they need bridging, their merchants are going to need to offload and onload and on-ramp. And so ultimately, it plays heavily into these liquidity pools, right? So Clearpool, maybe, where you can actually have cross correlation. And I think that's a really interesting marketplace. We've looked at, you've got Curve, Convex, you mentioned them earlier in your conversation, right? Really doing well, Fluid, and then boom, where and how does Clearpool come in with the merchant network where PayFi becomes a really important category where I'm getting paid in a dollar. I need to settle that immediately to be able to pay my rent, my suppliers, etc.
Exactly. So we want to sort of like, power this new stablecoin
Yeah.
economy with credit. The first, as mentioned, the first use case is powering this sort of like, payment flows where you have one fiat leg and enabling instant liquidity via stablecoins. But going forward, we want to do general sort of like, we want to be a general credit marketplace. And even, once we are reaching a world where everyone is already on stable coins and you don't need to finance the traditional sort of like legacy rails anymore. There's still always going to be a need for credit, right? Because I guess the economy is basically built on the concept of credit. So that's something that's never going to go away. We just see the payment financing right now as probably the best risk to reward and the best actual use case of stable coins. And that's why we're very, very, excited to be working in this category right now. Yeah. And maybe one other thing is like the other day I was thinking, we've built, I think at some point, over the last years, I did get a little bit of a feeling of like, hey, we're building all these applications, but like, but the biggest use case is still just sort of like trading some monkey pictures or some sort of like meme coins, etc. But now the other realization is that all that infrastructure that was built is actually really, really well suited to replace the whole sort of like legacy banking rails that we've created, right? So decentralized exchanges are going to be sort of like also used to sort of like swap between all of those different new currencies, all of those different assets. So everything we've built we now see that is actually being utilized for real world use cases. And yeah, I mean that's quite exciting to see, right? That's great. And that's also like coming from fintech, it feels like okay, this is what it was like a few years ago. This was still what it is, but like there is actually like a better way, and we're creating this better way, and makes you, at least myself, being more and more sort of like positive about where our industry is going.
Yeah, and I think it also makes all the years that you've been building throughout the winter, right, sort of rewarding that all of a sudden now we have a regulatory framework or a regulatory environment that is way more friendly to crypto, ultimately as a result of having gone through the experience of seeing what the limitations are and the restrictions are associated with the existing TradFi system, right? And I think we have no idea how fast this is going to accelerate and what this means. The adoption of the dollar, and I do think it's going to be thanks to the Genius Act that the dollar is going to shift from this treasury central bank denominated environment to a heavily retail focused product. And there are going to be the intermediaries to those retailers, right? The distribution, as you call it, right? Be it merchants, be it fintechs, be it social media apps, where the users want to interact and trade. And I think that's really where the opportunity is just beginning. And imagine, we're going to have Amazon dollars, we're going to have WeChat dollars, and they're all going to be hot swappable. And you'll be able to have trading between those, the Shopify dollar, the Alipay dollar, whatever. You already have Alipay, so you got all these services, Alibaba dollar, where all these merchants that are supplying into those now, they need financing, they need bridging, they need liquidity. And so it's really a flourishing world, super exciting. You must be like working 24/7, pumped all the time, just really excited on the new window that's coming around the corner and getting ready for that.
No, absolutely. I think I mentioned it a few times right now. I think we're really right now this year with everything that's happening, all the regulatory clarity, etc. It really feels like um, everything accelerated 5 times, and
Yeah.
that's an exciting place to be. You can't capture everything, you can't work 24/7, but it's a good place to be, for sure. Yeah,
Yeah.
absolutely. Yeah.
Yeah, no, it gives you a purpose as well, because I think there is so many new avenues, and I think, where better to spend your time in areas where there's opportunity, the whole tide is going to rise. And I think one of the protocols that I'd love to talk to you about offline afterwards is really with Nuon.fi, which is a protocol that's been building around inflation protection for the stablecoin holder. So you're guaranteed
Oh yeah.
inflation protection. And then on the flip side, there's yield opportunities that the partners or the participants in the steward token are able to join and help achieve and identify what is that risk reward ratio? How do I get rewarded by overachieving inflation? How do I get penalized for underperforming? All the meanwhile, I have these inflation correlated assets that are providing the reserve and they're real world assets: oil, tokenized gold, tokenized silver, and tokenized Bitcoin, which has now become a big inflation hedge as well. So I think all of these opportunities are really coming to market, right? And yeah, the $2 trillion opportunity by the end of 26 is really now imminent, right? And I think what you're working on with Clearpool is really going to, and your experience ultimately with Food Panda, with Eat I Go, is heavily retail focused, right? And so, what were the issues that you were confronted when people wanted to buy from a mobile app, and what
Yeah,
was
I
the
think
cost?
I think I mean that's another thing, right? That unfortunately, like in DeFi, right, we're still at a point where interacting with most protocols is very not intuitive, right? Buying a gas token, transferring to MetaMask, doing all that kind of stuff. If you have to explain it to a normal person, I'm not even talking to my parents, right? I'm talking to a person that is same age group as me, mid 30s, and relatively tech savvy. If you need to explain them how to utilize MetaMask and make sort of like a transaction, etc., it is very difficult, right? And it's very counterintuitive. And frankly speaking, I think as a crypto industry, we have done a terrible job so far, right? And now we do see these new players that are sort of like taking what's good, but then putting a good sort of like interface on top of it, right? Where yes, obviously you might not have your own keys anymore, etc. But there's also a bit of a realization that most people maybe just don't really care about that. Most people don't really want to have the responsibility of you know of keeping their seed phrase safe somewhere, etc. Right? Most people just want to utilize it in a way that they're used to, right? Like in a way that how they utilize to order food or buy a plane, etc. And that's kind of like a new, and I think that's a good sort of like evolution that we're
Yeah,
currently seeing.
exactly.
And I think that is really where we going to the next level, where we can't stay that industry where we just sort of like dealing with industry insiders and always the same sort of like um, funds and effectively money, but now it's really something that touches on everyone, and actually sort of like having this more Web 2 players and more Web 2 people in general, I think, coming into this industry and bringing that know-how is probably it's a big positive for the industry, and it's what's really gonna drive it forward. And yeah, I think it's fair to say that we obviously have seen a much bigger adoption in the last sort of like 1 year versus ever before, and it is nearly all driven by stable coins, right? It is the reality is when it comes to altcoins or even Bitcoin, it's yes, there's some, I guess, institutions are buying to some extent, etc. But the actual adoption of crypto is mainly driven right now by stable coins. That's been the biggest product market fit we have, and I think in my eyes, that's what's really gonna sort of like transform the sort of like first the payment industry, but then the whole sort of like financial industry. And I don't think it's gonna completely change it like we originally thought, right? We might, for the idealists, it might not be a complete change. We might not, completely change the way the world works, right? And the way money is perceived, etc. In a way, it is, an improvement. It's quite a significant improvement, I would say, but it's still not going to completely change the way that a stock of Tesla is still going to be a stock of Tesla, whether it's tokenized or not. But now you can do multiple things with it. I do think that the bigger unlock is definitely coming from more illiquid assets. So definitely we saw that the liquid assets are the ones that are going to be that are that are being adopted immediately, like cash, T-bills, maybe now stocks. But I think the next ones are going to be the sort of like more illiquid assets, where currently I think there's been a lot of projects that we're building in the tokenized real estate place, in the tokenized private credit space, and I think there's been very, very little adoption so far. But I'm still positive that the real sort of like 0 to 1 unlocks are actually going to come from that sector, but it's going to take a little bit longer. And my vision is very soon, you're not only going to think in am I going to be paid? I want to be paid in US dollar or Hong Kong dollar. I'm going to be thinking I want to be paid in MicroStrategy stock, or I want to be paid in Bali real estate. Why not, right? I'm going to be paid in whatever asset. And I think that is really the cool big vision about the blockchain. It's still going to take a little bit of time, but that's personally where I think we're going to see the biggest breakthroughs, and that's going to still take quite a few years though.
Yeah, I mean, I think the biggest unlock comes from the fact that the cost of launching or tokenizing existing assets is far more effective on the blockchain than it is in the traditional world. Today, if you want to launch and do a listing or something, it's going to cost you millions of dollars to do a listing. It's going to cost you, a year or 2 years to get listed. That's just not worth it for a lot of the illiquid assets that get traded. And as a result, they get traded OTC or on the side because of that cost prohibition that's out there, let alone access to it, right? So ultimately, you've just limited access because of that cost, because of all the border issues and liquidity issues and regulatory issues. You've limited and inhibited innovation. And I think what we're unlocking right now is all of those limitations, and those prohibitions have been sort of unlocked, right? And so so it's really an exciting time, and I think you're really in an exciting spot, right where the action is. And obviously, Asia is also a super populous region. Infrastructure is taking and leapfrogging into brand new layers and levels that went straight to mobile, right? Why would we go to build out fixed lines and computers? And so how do I build that interaction? And soon we're going to go straight to glasses, right? So how do I do that? And what's that new interface going to look like? So
I
it's
think
exciting.
payments are always payments have always been more interesting, I think, in slightly more emerging markets, right?
Yeah.
Over the last couple of years, right? Same with like mobile wallets, etc., etc. Where we saw like a lot of obviously we saw a huge adoption in Asia, China, and Southeast Asia, and those kind of markets, versus I would say in Europe and even even North America, where things are still relatively similar, and the large sort of like card players are still very dominant. But yeah, I think slowly, it's going to move. It's going to come from emerging market first, but then I think there's going to be a lot of changes as well in the more developed world, as it just becomes a no-brainer to utilize stablecoins. Because frankly speaking, there's no point. There's no need. There's like even at 3% charge it sounds little, but it is huge, right? Most businesses,
Huge.
are a lot of, I feel like, yeah, in crypto, so when it comes to unit economics, a lot of people are not really aware, but like most companies, right, if you talk about 1%, 2%, 3% bottom line, that is a huge change, right? And there's a massive improvement. So it
Yeah,
just
but you
makes
just
sense.
compound that 3% here, and then that same dollar gets charged another 3% there again for being recycled into the ecosystem. So the higher the velocity of the money, the higher the velocity of those 3% charges that get incurred all the time. Not to mention each time you're doing a 30-day lag in the settlement of that charge, right? And so of that amount that was done for the transaction, which is anyway, super exciting times. Jakob, how can people follow you? Where can they find out more? What should they do to stay attuned with what you're working on?
Yeah, so I think I am most active on Twitter or X. So you can follow me. My handle is J Kronbichler, which is my surname. I know it's difficult, but you can find my
No,
name
we'll
very
put that
easy
in
on
the
X,
lines.
and then for the rest, it'd be great if you also follow Clearpool and you be up to date on what we're working on. Yeah, very excited to have been here. Thank you so much, Stefan. Super excited for the industry. Even more excited after our chat. And
Yeah. Great. No, thank you, Jakob, and follow. Yeah, we'll put the X accounts on the site, and so it'll be here for everybody to follow. So follow Jakob. Lots of good insights, and most probably see you in Singapore at Token 2049. Thank you, Jakob. Thank you.
yes, absolutely, and all the best with Truflation, which is also a very exciting project I've been following a little bit from the sidelines. So great work, and all the best. We catch up soon.
Thank you. Catch up soon.